Hi guys, it's CryptoBurp Adrian speaking. Welcome to today's exclusivity report. And today I've got for you a complete, full, comprehensive analysis of Bitcoin USD spot price. To start with, I definitely approach it from the top-down point of view, starting it off with a higher time frame, moving to lower time frames in order to see from the major to local context. And the major context tells you that we definitely, of course, had escaped, this long-term pattern, right? And this long-term pattern is definitely what you guys see, go somewhere I should say, from $69,000 down to $28,000, which had got broken downwards. Okay, this is very obvious, and I would argue that the implications have been somewhat devastating already. Right, many people have this tendency to anticipate that, if there is a major downwards trend, right, if there is a major kind of like deterioration in prices, that this deterioration is going to continue downwards forever, right? And the lower it goes, the more people would believe, the more the traders would believe that the downwards uh, tendencies are going to escalate and continue. And the peak happens to be the selling climax. Same way it works, the people are the most bullish whenever the market peaks out. Okay, on the upward side of the things. So here, having a look, like I said, on this actual bear market, right? This bear market got confirmed, in my opinion. However, my opinion is not much relevant to the market. But my opinion confirmed the bear market with a break through the major support, which was stopping the market to fall onto the bearish side in the long-term perspective. And ever since, we had actually, escalated downwards for a total measurement of a drawdown at 75%. Historically speaking, the typical bull market reversion, the reversal happens at around 85%. Okay, so this is exactly what you would see in here. So 84, 85, 82, 90% at times historically it had been when the market, let's say, was picking out for the very first time in the first cycle in 2011, off $30 down to $1, falling, somewhere around like 90%. The volatility seems to decrease percentage wise a little bit over the time. However, this is not stopping Bitcoin from getting extremely chopped, when the market goes sideways, right? So here, just for instance, we had this range pattern, this chart pattern, which was causing a lot of fuss and a lot of indecision overall, right? This is definitely not the type of a typical bull market peak, just like you would see where the market had oscillated in sideways before picking out basically, and for a year or 2 years. This is not a typical bull market resolution. However, regardless of that, there is a thing called, representativeness bias, where traders tend to anticipate and extrapolate out of small samples. As in, you see a reversal pattern here, right? Imagine this is, an ascending triangle, and the moment you anticipate, the moment you actually see some sequence of equal highs and lower and higher lows, to form a symmetrical to form a similar pattern to the reversal in 2018, they would take this pattern and directly extrapolate it, assuming, okay, that this pattern that would form here would have exactly the same implications. However, that's not how it works. This is not how it works, because what matters here is the statistical input to it. Okay, or should I say output. You should always take the largest context, take all the historical events and phenomenons of such a pattern, to work as a reversal pattern potentially. At first, you have to approach it with a denial, kind of like, uh, your base thesis is hypothesis, null hypothesis, so called, is that this pattern has no predictive power, right? This pattern, as a chart pattern, this ascending triangle would have and bear no consequences, or would have negative consequences, will not act well. And then when you falsify that, when you actually have data which shows you that historically, more often than not, historically, the probability was that, so after seeing such a reversal pattern, the market behaved well, or trended strongly upwards, then this could speak in favors of falsifying this basis hypothesis, right? So how it works in practice, again, you want to take the whole sample of historical data for Bitcoin. The longer, the bigger the sample, the better. Spot similar pattern occurrences and actually extrapolate based on top of that, right? So because there are not many instances, you cannot really extrapolate just the latest pattern and take it, if it formed here, and take it, assume it's going to exactly the same behave. That's not how it works. However, one can use that as a form of a reference, right? So if we are looking again at this chart pattern, potentially forming here, right? Whatever this chart pattern is, I'm talking about this local consolidation. This local consolidation, which by the way occurs at 200-week average, right? If we take this, this one is actual. This one is actually the 20-week average. But if we take it 200-week, right, then you would notice and recognize that historically, more often than not, the 200-week average had served as a strong support area for Bitcoin's long-term charts, right? It doesn't mean it cannot invalidate, as in break beneath, underneath, lower than the 200-week average. Uh, in fact, it tells you that more often than not, after spending quite some time at the average, be it here or a couple of months of the 2018 reversal here following the capitulation of the miners, or the COVID crash, which happened, typically Bitcoin tends to not stay for too long at the 200-week average. And if it does stay, it more often than not, it seems to be an accumulation phase. Okay, so if we see some extended time-wise, extended price action around or below the 200-week average, it makes it much more likely than this would serve as a historical accumulation range, accumulation pattern, just like you would have here, or in the past occurrences, right? However, remember that 200 weeks, the data is needed in order to create such an average. So it is very. This is the starting point based on this exchange. So, like I said, if we see some consolidation pattern taking longer than any short-term projections, to develop, under the 200-week average, which is this black curve, then this tells you that quite likely it may be a historical accumulation phase, which may be somewhere putting in the trough, the cyclical trough and low. We don't have a crystal ball, so we don't know, what the pattern is going to show us also on the lower time frames. However, if we take it, displayed on a 200-week basis, uh, on the hourly chart, on the daily chart, right, taking it a little bit lower, then you could tell that this could work as some long-term support resistance basis, right? Again, the moving averages tend to work on the mean reversion basis, as in prices tend to oscillate around their means. Whenever there's downwards trending mean, there's always going to be some instances where the prices trend below or above it for some limited time, right? So that it constitutes and combines into an overall downwards tendency on average. Here, however, you're looking actually at the 200-week reference, right? So this 200-week data tells you that the fair long-term price of Bitcoin is set at 22,500 approximately. Okay, this is what we can read out of that. And if we do, then again, whatever pattern forms in here, if it is like a cup and handle where the price just bottoms out, some smoothly, or this is some symmetrical triangle, imagine, right, where it could follow something like that, and it would coil up basically, or it had just formed, its left shoulder, and there is some processing of a head and shoulders pattern with a larger capitulation still pending, which is also possible. Then this could be used. This definitely could be used, as some form of validation for the pattern, right? Because the mean reverting nature tells you that the prices are going to sooner or later come back and revert back to its average value. So whenever we deviate below a lower, against this 200-week average, the less risk and the more opportunity it generates. Okay, as the risk reward ratio, or should I say return to risk, increases, right? So even applying just a very simple trend line, right? Just as a very simple trend line, we can definitely build a fan out of that, like a typical fan that consists of a couple of different trend lines, right? That would have different steepness, different slope of these trend lines, and based on these slopes, you can anticipate when the potential patterns can revert. Okay, so a breakout, let's say there is a consolidation phase which takes it eventually with a breakout here over the shortest term, trend line, if it takes over, the medium term one, the middle one, then this increases the chances on the self-fulfilling prophecy basis maybe to take it even higher. However, until you get proper breakout thresholds, firstly over the 200-week average on the weekly basis or throughout the trend lines, I would say that the bears remain in control, and one should account for a possibility of taking us lower, right? Where that is, where that stops, nobody knows. There are certain projections. My personal bet is between $10 and $20,000. I have no idea when it's going to bottom out. I don't have a date in my mind. Uh, However, the chances the seasonality effects rather point towards lazy and low volume quarter three, and rather, more likely than not, again, historically speaking, there are chances to see the reversal pattern form and complete somewhere throughout quarter four. Typically, November, December is when the year closes, and again, this year close is also is often accelerating in its results, for many stock markets and many risk on assets. This could be likely.